Hi, everyone. It's great to see you. I'm here with Lou Sarris, who it was really great to see you last week at our sales meeting. And there was a few topics I just wanted to make sure that we revisited so you can get a clear understanding of what Lou was referring to. So there was actually three things for me. One was that NorthPoint Mortgage will go ahead and underwrite a loan before um, before you even have a property under contract. They can do everything until the property TBD. So your buyer has a stronger qualification letter for that. The second, I can't remember, but let's go ahead and get to recasting a loan. Lou made a great point with recasting loans and the options that they have available that will really help give your buyers some purchase power. So, Lou, I just wanted you to maybe clarify exactly what recasting means, and how the agent can use that to help to get their buyers into a home.
Absolutely, Tina. Well, thanks for having us today. This would be a great segment to just help out your seller in general. So basically what a recast is taking after a borrower closes on a property. They are able to go back in. Let's say you have a seller and the seller needs to get under contract before he or she sells their home. What we're doing is we're qualifying them up front to make sure they qualify for both properties. And then after they close, let's just say they don't have the 20% to put down because they haven't sold their property yet, but they have a really large piece of equity sitting in the property that they're getting ready to sell. So we close on the new property up front. And then after their property sells that they have all the equity in that they couldn't sell because, let's face it, it's just a tough market to get under contract with everything. So they've moved forward with just grabbing this house. They can come back and do what we call a recast. So the recast feature is they can put a large chunk of money down toward the mortgage that they just acquired. And let's say, for example, they had to finance $400,000 and they only put 5% down. They're paying PMI. Instead of refinancing the loan, we can do what they call a recast. There's very little to no cost depending on the servicer. And basically, let's say they got 200,000 out of the sale of their house and they want to put the whole 200,000 into the new property that they only put 5% down to acquire. Well, we will now recast the mortgage at $200,000, taking the 200 in equity they got from the sale of their house and put it toward the new mortgage without refinancing. And then the recast, what that means is we will now amortize the 200,000 on their same interest rate with no closing costs. So that's going to reduce their payment, drop their PMI, and reduce their payment to where it would be on a $200,000 loan versus a $400,000 loan. Hopefully I didn't confuse you too much there.
So they get to take advantage of the interest rate today, and
Right.
the payment gets recalculated once they pay down with the equity of the home that they sell. And
Correct.
so if they can qualify to purchase both homes at the same time, how easy is it to sell a property these days? The challenge is to find the property to buy. So then your buyer doesn't have to move twice. They don't have to worry about much. They still have that break in time between when they close and when their first payment on their first mortgage is due. But you're talking about maybe a slightly higher payment for a month or two, because as soon as that property sells, they can take that equity and put it towards the principal of the new home and get a new lower payment. So it basically is a huge convenience factor. And I know there's some other programs out there like Ribbon or Knock where you can your client pays a percentage to use their cash, but this is another option that may be a lot more affordable. Knock or Ribbon is like 1 or 2% of the loan amount. This is maybe your client is going to have one high payment one time, They don't have to move twice, and they get the convenience of recasting their loan. So they get a lower payment after their one payment if they sell their house pretty quickly, which is exactly what we're seeing in this market today.
That is absolutely correct. And we're using it a lot. We're getting a lot more folks asking about it too, just for that exact reason. So,
Right. So you don't have to go to a closing attorney, refinance, any of that again. You just basically contact the servicer and you make your payment of the equity that you earned on the sale of your home. And then they recalculate your monthly payment based on that lower loan amount.
correct. And it will take usually about 60 days to process that. There's a whole process they have to go with, some documents that, have to be signed in front of a notary, and it's pretty official, not much paperwork at all. However, there is a little bit of a process because they are recalculating a loan that just closed.
Yeah.
So,
Well,
yep,
that was a great point. So, and then I think the third thing I was going to mention is at the sales meeting, y'all talked about just being a partner with the agent. And, if you have a strong buyer willing to call the listing agent to, verify and let them know the strength of the buyer and why we always partner with NorthPoint Mortgage is you close on time, even in this crazy market. So you've always been such a reliable partner for us, and I really appreciate your time.
thank you very much, Tina. And we appreciate our relationship with you all.
Thanks.